Harley-Davidson promised its electric motorcycle gamble would save the company. Instead, it's failed. And the truth is worse than anyone imagined. What was meant to reinvent Harley for a new generation has become a cautionary tale of high prices, broken promises, and a market Harley couldn't conquer. And when you see the shocking numbers and details Harley doesn't want fans to know, you'll understand why its electric gamble may have backfired for good. The failure of LiveWire. Harley-Davidson swore this was the future. In late 2019, they rolled out their very first electric motorcycle, the LiveWire. The price? Just under 30 grand, $29,799. The pitch was bold. This bike would bring in a whole new generation of riders. But almost right away, things went sideways. Within weeks of shipping, Harley had to slam the brakes on production to fix what they called a non-standard condition caught in testing. The pause didn't last long, but the first impression was already ruined. For a high-end product meant to inspire confidence, the very first headlines were about a factory problem. And then came the numbers. By the end of 2021, Harley's own reports showed LiveWire sold fewer than 400 bikes. That's not the kind of output you expect from a giant brand trying to launch a whole new category. In 2022, shipments came in at 597 worldwide. But notice that word, shipments. That doesn't mean 597 riders were actually out on the road. It simply marks the number of bikes pushed out of the warehouse. LiveWire never released a global retail sales figure for that year, so the real count of motorcycles that ended up in customers' garages could only have been that high at most, and almost certainly lower. This is not what the company promised. Early investor decks were talking about thousands of bikes taking off fast, with projections hitting 100,000 per year by 2026 and nearly 200,000 by 2030. Stack those dreams against the reality, a few hundred bikes a year, and the gap is staggering. Part of why it felt so misleading was how Harley framed the results. Analysts believed that by leaning hard on shipment counts and broad categories instead of giving clear US retail sales, Harley softened the blow and bought time with investors. At times, the company even bragged that LiveWire was the top-selling on-road electric motorcycle in the US. Sure, that sounds impressive, until you realize the niche is so tiny that moving just a couple hundred units can land you in first place. But sales numbers are only the surface. The real question is why riders refuse to line up for it. Why it failed. When Harley-Davidson rolled out the LiveWire, the pitch sounded fresh, a sleek electric bike aimed at younger riders who loved clean tech and quick city speed. But there was one problem you couldn't ignore: the price tag. Just under $30,000. That was enough to make most people stop in their tracks. Even Harley's own sales managers could see it on the showroom floor. People would walk in curious, maybe even excited, but the second they heard the price, they walked right back out. One dealer said, "Interest is very high, but once you get to pricing, interest is thrown out the window." And that wasn't some rare case. That was the story over and over again. The strange part? The bike itself wasn't bad. In fact, people who rode it said the LiveWire was a blast. Instant torque, sport bike punch, that electric takeoff feeling the moment you twisted the throttle. That part worked. What didn't work was how far you could actually ride it. Real-world tests kept hitting the same number, around 95 to 100 miles on a full charge in mixed conditions, and closer to 70 miles if you stayed on the highway. That's not road trip material. That's a short city loop, maybe your daily commute, and then you're scrambling for a charger. And just trying the bike was tough. From day one, only select Harley dealerships could sell the LiveWire. To qualify, they had to spend money on a DC fast charger, special tools, and staff training. That instantly cut down the number of places you could even sit on one, especially if you didn't live in a major city. If your local shop wasn't certified, you weren't getting a test ride. Then came the stumble that made things worse. Because production was paused just weeks after the first deliveries, riders who were already worried about the cost, the range, and the charging network now had one more concern on their list: reliability. And here's the real mismatch. Harley wanted younger buyers, but younger buyers are the ones juggling rent, student loans, and everyday expenses. Obviously, those people weren't going to drop $30,000 on a bike that barely went 100 miles. Analysts believe Harley simply jumped too soon. America didn't have the charging network in place, and battery tech wasn't cheap enough to make the range worth the price. Even Harley's CEO, Jochen Seitz, later admitted the lack of charging stations was holding sales back. And that lined up with what riders were saying back in 2019 and 2020. Finding a fast charger on a motorcycle trip was more work than it was worth. Harley's answer to the failure wasn't to fix the bike. It was to spin the whole thing into its own company. The spin-off disaster. In May of 2021, the company stripped the Harley badge off its electric project and relaunched it as a standalone brand called LiveWire. The pitch sounded bold: new logo, new storefront, same promise that this was still the future. For years, people had been calling it the Tesla of motorcycles, and the rebrand leaned hard into that hype. A year later, Harley took it all the way to Wall Street. In September of 2022, LiveWire went public through a merger with a special-purpose investment shell. On paper, the deal looked like fireworks: a $1.77 billion enterprise value, $400 million of cash and trust, plus another $100 million each from Harley itself and Taiwanese manufacturer KYMCO. Harley kept control with roughly three-quarters ownership. Jochen Zeitz sat as chairman while still acting as Harley's CEO, and Ryan Morrissey was brought in as president. On day one, this looked like a clean break for Harley's electric gamble. Big money, big partners, and a promise that this was going to be the motorcycle company's future. Then the sales hit, and they hit hard. In the second quarter of 2023, LiveWire sold 33 motorcycles. The same quarter a year earlier, 225. That's an 85% collapse. Revenue fell almost in half to $7 million, while operating losses ballooned to $32 million. The explanation buried in the investor deck was simple enough. The cost of building a new company was crushing the tiny volume of bikes actually leaving the showroom. The third quarter told the same story with a different headline. LiveWire sold 50 bikes in the fall of 2023. A year earlier, that number was over 200. That's a 76% drop. Revenue from motorcycles slid to barely over $1 million, and the operating loss still rang in at more than $25 million. And the math only got worse as time went on. For the full year of 2023, LiveWire shipped 660 bikes. In 2024, that figure slipped to 612. The final quarter of 2024 delivered the real punchline. 236 units sold compared to more than 500 in the same quarter of the previous year, a drop of over 50%. Net loss for the year still landed at nearly $94 million, only slightly less than the $110 million burned the year before. Filings even showed an inventory write-down as the company tried to shrink production to match demand that simply wasn't there. Harley's leadership kept talking about cutting costs, consolidating operations in Milwaukee, and reducing cash burn, but the scoreboard stayed blood red. Then 2025 started with a thud that cut through all the corporate spin. In the first quarter, LiveWire sold 33 motorcycles in 90 days, while posting a $20 million operating loss. By the second quarter, sales ticked up to 55, but that was still a 65% slide from the same period the year before. So where did all that money go? The filings kept pointing to the same culprits: the massive cost of standing up a new company and pouring cash into developing the S2 platform, the battery pack, motor, software, and electronics that were supposed to make the next generation work. On top of that, LiveWire took charges for inventory it couldn't move, essentially paying the price for building too much of a product that wasn't selling. This is the part that critics keep circling. From the very beginning, analysts argued that spinning LiveWire off looked like ring fencing, a way to move all the losses into a separate shell so Harley's core business wouldn't look so messy. Whether you buy that or not, the outcome is right there in the numbers. Every quarter's filing puts the damage in black and white, while Harley maintains majority control and keeps a careful board seat distance. But even if the spin-off had worked on paper, LiveWire still had a bigger problem. It never felt like a Harley. Harley's identity crisis. Harley's image has always been larger than life. When people think of the brand, they think of big V-twin engines rumbling under chrome, leather jackets on the highway, and long trips where the ride itself is the point. Under CEO Jochen Zeitz, Harley leaned even harder into that identity. The company cut back its entry-level options and doubled down on heavyweight cruisers and high-end touring bikes. Harley itself makes it clear where the profits come from. Touring, large cruiser, and trike are the pillars that keep the company steady. That's the center of gravity every new idea has to orbit. And when LiveWire showed up, it didn't fit. On paper, LiveWire looked like the future. The bike was sleek, fast, and loaded with electric tech. But the vibe was all wrong for Harley's core crowd. By design, it was quiet. No signature idle shake, no thunderous exhaust note. To keep it from feeling dead at stoplights, Harley even invented a gimmick they called haptic pulse, a soft thump from the motor meant to mimic a heartbeat and remind you the bike was alive. Clever? Sure, but it also underlined the problem. If you have to simulate being a Harley, then you're not a Harley in the way riders have known the brand for decades. Dealers felt the mismatch right away. From the start, only shops that invested in electric tooling were allowed to carry the bike. That meant buying and installing a level 3 DC fast charger, setting up a separate service area, and training staff. Those costs stacked up quickly, and many local dealers looked at their market and simply passed. Some dealerships said they never even ordered a LiveWire because the expense didn't make sense for their area. Others pulled out after planning to participate because they couldn't see enough demand in their towns. When the people who sell Harleys every day decide the product isn't worth stocking, it's hard for a new model to stand a chance. Dealers also had another layer of frustration. They allege Harley pressured them into carrying the LiveWire even though they knew local riders weren't interested, piling on costly upgrades, remodels, and inventory demands that cut into profits. The identity gap showed up in the little details too. Harley's sound isn't just noise, it's part of the brand's DNA. That deep exhaust note signals presence before the bike even comes into view. LiveWire had its own futuristic whir, more like a turbine winding up. Reviewers thought it sounded cool, but it didn't signal Harley. At the showroom, that matters. While the company wrestled with its own identity problem, other motorcycle makers were out there quietly building their own electric communities, linking up on shared platforms, and capturing the early adopters Harley needed most. Competition leaves Harley behind. Here's the part that really stings. While Harley was still trying to figure out what an electric future should even look like, the companies that lived and breathed EVs were already years down the road. They weren't just designing bikes. They were building rider communities, dealer networks, race credibility, and even shared tech rules. And when those rules started sticking, LiveWire was left standing outside the circle. Take Zero motorcycles. They didn't just pop up when electric became trendy. They've been at it since 2006. Starting in Santa Cruz with a NASA engineer named Neil Psyche. Through the 2010s, Zero was steadily rolling out street and dual sport bikes, upgrading hardware, tweaking software, and learning from real customers. It wasn't about a splashy launch, it was about iteration, refining each generation, and keeping real bikes under real riders. By the early 2010s, they already had models like the S and DS in circulation. Then came the higher performance SR, the SRF in 2019, the SRS in 2020, and the adventure-focused DSRX in 2022. That's a history of constant feedback, firmware updates, and thousands of riders building a community long before Harley's LiveWire even showed up. And Zero didn't stop at selling bikes to enthusiasts. They got themselves embedded in institutions that ride every single day. Police departments in Northern California were patrolling on Zero DS bikes more than a decade ago. The near-silent ride made them perfect for campuses, parks, and urban beats. From there, it spread quickly. By 2017, the Vancouver Police became the 100th North American agency to adopt Zeros. Later, the company shipped nearly 300 bikes to Indonesian police for the G20 summit. The less flashy, but arguably more important work was happening dealer by dealer. Zero knew education mattered, so they built demo events into their DNA. They kept showing up at bike nights, rallies, and parking lot events to put people in the saddle. They still run national test ride calendars and even offer rebate programs for demo rides, rewarding people for just giving the bike a chance. That's how you build EV literacy. By mid-2025, Zero had 81 dealers across 37 US states. On the other side of the Atlantic, another player was making noise, and doing it in a way Harley never did. Energica, a small company out of Modena, Italy, built its entire identity around high performance and racing cred. Their Ego superbike hit the streets in 2015, and just a few years later, they landed something huge. They became the exclusive supplier for the Moto E World Cup. From 2019 through 2022, every electric race on the MotoGP calendar was powered by Energica's Ego Corsa. Even after Ducati took over in 2023, Energica had already locked in its place in racing history. While Zero and Energica were stacking up credibility, another wave was quietly reshaping the whole industry, one that had nothing to do with flashy launches and everything to do with making EVs practical. In Japan, the four biggest motorcycle makers, Honda, Yamaha, Kawasaki, and Suzuki, did something they almost never do. They teamed up. Along with energy giant ENEOS, they created Gachako in 2022, a joint venture to roll out swappable battery stations across Tokyo. At the same time, in Europe, Honda, Yamaha, KTM, and Piaggio launched the Swappable Batteries Motorcycle Consortium, and within a year, more than 20 companies had joined. The idea was simple. Instead of waiting hours to charge, riders could pull into a station, slide out their dead battery, pop in a fresh one, and be back on the road in minutes. No more reinventing the plug every time a new model came out. Just one common pack that worked everywhere. It wasn't flashy, but it was smart. Standardized 48-volt packs meant bikes could be lighter, smaller, and easier to live with, especially for riders in apartments who couldn't charge at home. Japan proved the concept with real stations, and Europe was racing to build its own network. And here's the problem for Harley. LiveWire wasn't in those rooms. While other brands were teaming up to set the rules, Harley stayed on the sidelines. Analysts warned that being left out could trap LiveWire in a dead end, higher costs, fewer options, and way more hassle for riders. Think about it. If the rest of the world moves to easy battery swaps and shared networks, but LiveWire sticks to its own closed system, who are riders going to choose? The brand that makes life simple, or the one that makes it complicated? Meanwhile, competitors just kept making products that matched how people actually ride. Energica doubled down on performance with the Ego Superbike and the Eva Rebelle Street Fighter, then stretched into touring with the Xperia for riders who wanted comfort and long-distance range. Even when Energica hit financial trouble in 2024, it didn't erase the fan base they'd already built. Riders who trusted the bikes because they'd seen them on racetracks, demo days, and dealer floors. Falling behind rivals didn't just cost Harley prestige, it showed up in the balance sheet, and the numbers are brutal. Financial fallout. Money talks, and LiveWire's books are basically screaming. In the third quarter of 2023, the company pulled in about $8 million in revenue. Sounds okay until you see the other side of the ledger, an operating loss of roughly $25 million. And that wasn't just one ugly quarter. In the very same filing, management warned that for the full year, they expected to lose well over $100 million. Fast forward to the third quarter of 2024, and the hole hadn't closed. It had gotten deeper. Revenue slid to just $4.4 million, and the quarterly operating loss ballooned to about $26.5 million. Once again, they told investors to brace for another full-year loss north of $100 million. That's not the kind of path to break-even Wall Street was promised. The cash pile shows the same trend. At the end of 2023, LiveWire still had about $168 million sitting in cash and equivalents. By the end of December 31st, 2024, that cushion had shrunk to roughly $64 million. That's a drop of more than $100 million in just 12 months. You don't need a finance degree to see what that means. The burn rate was brutal, and the core business couldn't cover it. That's when Harley had to step in with a lifeline. On Valentine's Day of 2024, LiveWire signed a deal with Harley for up to $100 million in emergency funding. Think of it like a credit card with a huge limit. LiveWire could dip into it when needed, and Harley had the option to swap that debt for LiveWire stock later. The clock was ticking too. The deal ran for 24 months from the first withdrawal, or until October 31st, 2026, whichever came first. And this wasn't free money. The interest rate was 6-month SOFR plus 4%, and it came with strings attached. LiveWire wasn't allowed to pile on new debt, sell off big assets, or hand out certain payouts while the loan was on the books. The branding said, independent company, but the reality looked a lot more like bailout money from mom and dad. Then Harley made the leash even shorter. In early 2025, executives told investors they wouldn't put in another dime beyond that $100 million line. This means LiveWire had a capped allowance. If they didn't figure out how to stop losing money fast, they'd run out of road. Critics jumped on that gap between the story and the scoreboard. They say Harley promised shareholders LiveWire would be standing on its own in just a few years, while behind the scenes, the losses kept piling up and the timelines for break-even kept getting pushed back. But the damage wasn't just written in quarterly filings. Out on the street, riders had their own verdict, and it hit just as hard as the financial losses. Fans and cultural backlash. Riders didn't just shrug at LiveWire, a lot of them laughed. In Harley groups online, people kept saying the LiveWire was not a real Harley. That jab started way back in the demo days, and it never went away. People said the loyal crowd wouldn't touch it because it didn't look or sound like the bikes they grew up with, and they were right. Years later, you can still find Harley owners listing it alongside other models purists love to mock. The issue wasn't power or speed. It was the missing rumble, the silent takeoff at a stoplight, and the feeling that this bike didn't announce itself the way a Harley is supposed to. That silence cut deeper than most outsiders realized. A lot of longtime Harley riders live by the saying, "Loud pipes save lives." They believe the roar makes drivers notice them in traffic. True or not, it's a belief woven into Harley culture. So when a whisper-quiet Harley rolled out, it didn't just feel unusual, it felt like betrayal. The reaction was emotional before anyone even bothered to check the specs. And when people did test it, the same theme came up. Riders admitted the LiveWire was quick, smooth, and fun. But on highways, they planned trips more carefully, and many said they felt less visible without that trademark growl. On motorcycle forums, the verdict became a running joke. The bike was cool tech, but still wasn't Harley enough. At the same time, Harley was hoping younger buyers would rush in, but that door wasn't exactly swinging open. The average Harley customer was already pushing 50, and the company had doubled down on high-end touring bikes for older riders. Meanwhile, millennials and Gen Z were looking elsewhere, to brands that felt fresher, more affordable, and easier to connect with. Yamaha, Indian, and Royal Enfield scored points with that crowd because their bikes spoke the language younger riders wanted. Harley, and especially LiveWire, didn't. Then came the perception problem. To a lot of fans, LiveWire felt less like a genuine push into the future and more like a PR stunt. It looked like Harley wanted the headlines about being futuristic without putting in the years of groundwork to build an electric community. Whether that's fair or not doesn't matter. In branding, perception is reality. The shocking truth. Here's the part Harley never wanted to admit. The electric gamble missed on every front. Sales never broke out of their tiny niche. The money kept bleeding. The brand story fell apart, and the community pushed back. Even with the rebrand and new model names, the numbers stayed small. Investor updates kept describing a business stuck in low-volume production runs, not one racing toward mainstream growth. Even the hype around the S2 Del Mar couldn't change the pattern. That's why analysts now talk about a quiet shrink, cutting back output, tightening budgets, and keeping the program alive without ever chasing the scale it was supposed to reach. Listen to the way leadership talks in 2025. The message has shifted from "we're leading the way" to "the country just isn't ready." Jochen Seitz now points to weak charging infrastructure and slow adoption as the reason LiveWire never took off. And it's not just critics on message boards saying it. Trade press and close watchers of the filings are asking if Harley will keep trimming, quarter after quarter, until the electric unit is nothing more than a small R&D project sitting off to the side. The tone isn't hopeful, it's skeptical. Some point to leadership changes and insider stock moves as signs that something deeper could be on the table. None of it proves Harley's pulling the plug, but it explains why the talk of scaling back refuses to go away. Here's the bigger warning hanging over the next year. If volumes don't recover, market watchers say Harley could walk away from electric altogether and refocus on what it already knows: big gas-powered cruisers and tourers, the bikes that still keep the company alive. Harley-Davidson's electric gamble was meant to secure its future. Instead, it exposed its weaknesses. The shocking truth is that Harley failed to connect with younger riders, overpromised investors, and underestimated its competitors. Fans are left asking, was LiveWire the bold first step into Harley's future, or the gamble that put the company closer to the end of the road? Thanks for watching. Now check out the videos popping up on screen for more unbelievable stories.